I'm Tim Jones, the recently appointed Chairman of the Board of Directors of Xcite, and on behalf of the Board and the company's management team, it is my pleasure to welcome shareholders and guests to our annual and special general meeting. Can you hear me, or is it vibrating? Let me start by introducing the members of the Xcite management team. Rupert Cole, Chief Executive Officer, Steve Kew, Chief Operating Officer, Andrew Fairclough, Chief Financial Officer, are the three executive directors, and my fellow non-executive directors on my left, Greg Moroney, on the other table, Scott Coughlin, and Harry Wilson, who's recently joined us, bringing with him a wealth of experience in the upstream oil business. At this stage, I'd also just like to take a moment to thank my predecessor, Roger Ramshaw, for his years of service to Xcite, and to wish him well in his retirement. Before we move into the formal part of the meeting, just let me say a few words about our major achievements during 2013 and the progress we continue to make in 2014. Last year was an important one for Xcite. Firstly, we more than doubled the 2P reserves to 250 million barrels, which makes Bentley one of the largest proven undeveloped fields in the UK North Sea. Secondly, in the wake of the visible outputs from our 2012 well test, 2013 saw us focusing on analysing and evaluating those results in order to improve our understanding of the reservoir and to enhance the development plan. This was a crucial step in our preparations to identify a suitable partner, but against an industry backdrop where development spend by the major oil companies was under severe pressure, particularly in the North Sea. I think the rigour of our analysis was reflected by our ability to sell the Bentley data to our neighbour, the Bressay Development Group, for $15 million. By the beginning of this year, we took the decision to focus our attention on discussions with a number of industry service providers, progress with conventional parties having slowed down. We needed to sustain the momentum to ensure that we could continue to move Bentley forward, rather than just wait and hope for the sentiment to change. Shareholders will have seen that we made significant progress with this strategy. Agreements with AMEC, Arup and TK are designed to put a framework in place within which we can move the project forward and then on into binding contracts, all of course subject to FDP approval. What we do as a company could not be achieved without the support of DEC, the Department for Energy and Climate Change, and we've maintained an active and consistent dialogue with them, resulting recently in the grant of a significant licence extension for Bentley up until the end of 2016. Shareholders will have seen the recent announcement of the strategic agreement that we've negotiated with Statoil and Shell that provides a solid foundation for the evaluation of the development of the area as a whole. We believe that this initiative has the potential to deliver significant additional value from Bentley in the future and reflects the drive for greater collaboration identified by the recent Wood Review. We have a busy work programme underway for the balance of this year to progress the Bentley field towards development, and I shall leave Rupert to outline that further when he does his presentation. And the process will be that we'll deal with the formal business next. Then I shall close the formal part of the proceedings, hand over to Rupert for the presentation, and then give you the opportunity after that to ask any questions that you might have. So now, with the consent of the meeting, I'll ask Andrew Fairclough to act as secretary, and I'll appoint Stan McKean from Stikeman Elliott as scrutineer to report on the holders of ordinary shares present in person, to report on the number of ordinary shares represented in person and by proxy at the meeting, and to tabulate the votes on any ballot taken at this meeting, and to report thereon to me, the chairman of the meeting. Do you have a report for me? Thanks very much. Thank you. I'm advised by the scrutineer that we have a quorum present. with at least 2 persons present in person, each being a shareholder entitled to vote. On a duly appointed proxy for an absent shareholder so entitled, and I direct that a copy of the scrutineer's report be kept by the Secretary with the records of the meeting. I have the certificate of our transfer agent, Computershare Investor Services Inc., indicating that notice of this meeting was mailed on the 22nd of April 2014 to all those entitled to receive it. So that proper notice of the meeting has been given in accordance with Canadian securities laws and with the BVI Business Companies Act. And I direct that a copy of the notice of the meeting with proof of service be kept by the Secretary with the records of this meeting. So I therefore now declare that this meeting is regularly called and properly constituted for the transaction of business. Let me just say a few words about the proceedings. The topics of discussion on the agenda today are set out in the Management Proxy Circular sent to all shareholders entitled to receive it. And there are further copies, if anyone needs one, on the scrutineer's desk. I'd be grateful if you'd wait until the question period after Rupert's presentation if you have any questions on topics that are not specifically covered on the agenda. Individuals wishing to address this meeting, I would ask to identify yourselves for the benefit of the other shareholders present and to confirm that you are indeed shareholders before you ask a question. So let's move on to the formal part of the agenda, dealing first with the annual report for the year ended 31 December 2013. A copy of the 2013 annual report of the company, including the company's audited financial statements for the year ended 31 December 2013, the auditor's report thereon, and the management discussion and analysis for that year was made available for download from the company's website and was sent to all those who elected to receive the documentation. So I now table the 2013 annual report of the company and ask the Secretary to file it with the records of the meeting. Are there any questions about the 2013 annual report? So the next point in the agenda, before we proceed to the passing of the resolutions, I'd like to comment on the voting procedure. Each ordinary share confers upon its holder 1 vote on all matters to come before the meeting. With respect to the election of the directors of the company, proxies have been solicited for the proposed qualified persons listed in the Management Proxy Circular, including Roger Ramshaw, who has retired and therefore declines the nomination as a director. As disclosed in the Management Proxy Circular, where a proposed nominee is unable to serve, the person's name in the accompanying instrument of proxy will use their best judgment in voting for alternative nominees. Rupert Cole has advised that proxies appointing him as proxy holders will be voted in favour of the re-election of Harry Wilson. I'm advised by the scrutineer that based on the proxies received, about 10% of the ordinary shares conferring the right to the vote at the meeting will vote in favour of the re-election of the current directors of the company for the ensuing year, secondly, for the appointment of the auditors of the company and the authorising of the Board of Directors to fix their remuneration, and thirdly, for the ratification, confirmation and approval of the stock option plan of the company. The vote for the resolutions on the election of directors, the appointment of auditors and the ratification, confirmation and approval of the stock option plan shall be decided by a show of hands unless voting by ballot is requested. A vote by ballot may be requested by any shareholder or proxy, either before or after a vote by show of hands has been conducted. So firstly, the election of directors of the company for the ensuing year. The company's amended and restated Memorandum of Association and Articles of Association, which I shall refer to as the Articles, require the board to consist of a minimum of 1 and a maximum of 12 directors. The Articles permit the board to appoint additional directors between annual meetings of the shareholders. Currently, the board consists of 7 directors, which the board considers to be an appropriate size for effective oversight and decision-making. The current directors are Rupert Cole, Scott Coughlin, Andrew Fairclough, Steve Kew, Greg Moroney, Henry Wilson and myself, Tim Jones. Each of us retires at this meeting and is nominated for re-election. All the management nominees are currently members of the Board of Directors, Mr Wilson having recently been appointed to the Board on the 7th of May 2014. As I've previously said, Roger Ramshaw has retired and therefore declines his nomination as a director. All other proposed nominees have consented to stand for election and to serve as directors if elected. It is proposed that these nominees be elected to serve until the earliest of 1, their death, 2, their resignation, and 3, their retirement at or before the next annual general meeting of the shareholders, and 4, such other date until which they may remain directors pursuant to the BVI Business Companies Act. May I just introduce Harry Wilson, who is new to most of you, and our newly appointed board member from just a couple of weeks ago. The management proxy circular lists 6 of the 7 nominees for obvious reasons, because as Harry was appointed after the preparation and mailing of the notice of meeting, he's not included. Harry has over 35 years of international experience in upstream oil and gas, initially as an explorer with BP, and has since founded and been Chief Executive Officer of several independent oil companies, including Dragon Oil, Endeavour Oil, Sterling Energy, and he's currently the Non-Executive Chairman of Eland Oil and Gas. The board has concluded that Mr Wilson possesses the qualifications, skills and experience needed to assist the board to carry out its mandate effectively, and as such, the board is recommending Mr Wilson for re-election at this meeting. I now call upon Phil Gardner, who's a shareholder of the company, to put in nomination the names of the nominees recommended by the Board of Directors, including Harry Wilson, for re-election as directors.
My name is Phil Gardner. I'm a shareholder of the company. I nominate the following persons as directors of the company to hold office until 1, the earliest of 1, their deaths, 2, their resignation, 3, their retirement, in accordance with the Articles of Association of the company, and 4, such other date until which they may retain directors, pursuant to the BVI Business Companies Act. The nominated directors are Rupert Cole, Scott Cotland, Andrew Fairclough, Tim Jones, Steve Kew, Greg Moroney, and Henry Wilson.
Thank you. The BVI Business Companies Act requires that the Board of Directors be elected. Each of Rupert Cole, Scott Cotland, Andrew Fairclough, Steve Kew, Greg Moroney, Harry Wilson and Tim Jones has confirmed that he's prepared to serve as a director. We each qualify as a director under the provisions of that Act. Are there any other nominations? Hearing none, I declare the nominations closed. Phil, would you kindly introduce a motion proposing the election of these 7 directors?
Mr Chairman, I move that the 7 persons nominated be elected as directors of the company until the earliest of 1, their death, 2, their resignation, 3, their retirement, in accordance with the Articles of Association of the company, and 4, such other date until which they may directors pursuant to the BVI Business Companies Act.
Thank you. John Fife, would you please second the motion?
Mr Chairman, my name is John Fife. I'm a shareholder of the company. I'm pleased to second the motion.
Thank you, John. Any discussion? So we'll move to a vote then, please. Would all shareholders in favour of the motion please signify by raising your hand? Thank you. All shareholders withholding authority to vote, please signify by raising your hands. The motion is carried. I declare that Rupert Cole, Scott Cotland, Andrew Fairclough, Steve Kew, Greg Moroney, Harry Wilson and myself are elected as directors of the company until the earliest of death, resignation, retirement or such other date directed by the BVI Business Companies Act. The next matter being submitted to the shareholders is the appointment of the company's auditors and the authorisation of the Board of Directors to fix their remuneration. BDO LLP were appointed as auditors of the company in 2007 and audited the financial statements of the company for the year ended 31 December 2013. You've been advised by means of the management proxy circular of management's recommendation to appoint BDO as the company's auditors. May I call upon John Fife, a shareholder, to make the necessary motion. John,
I'm a shareholder of the company. My name is John Fife. I move that BDO LPP are appointed auditors of the company, until the next annual meeting of the shareholders, and that the board of directors are authorised to fix their remuneration.
Thank you very much, John. Would another shareholder care to second the motion?
Yes, Mr. Chairman, my name is Phil Gardner and I'm a shareholder of the company, and I second the motion that BDO LLP be appointed auditor of the company until the next annual general meeting of shareholders, and that the board of directors be authorised to fix their remuneration.
Thank you, Phil. Any discussion on this? So I'll now call all shareholders in favour of the motion. Please signify by raising your hands. And thank you. Any shareholder withholding their authority, please signify by raising your hands. The motion is carried, and therefore I declare that BDO LLP are hereby appointed as auditors of the company, and that the board of directors is authorised to fix their remuneration. Next point, the ratification of the stock option plan of the company. As part of its reward strategy, the company adopted a stock option plan, the purpose of which is to provide an incentive to the directors, officers, employees, consultants and other personnel of the company and its wholly owned subsidiary, Xcite Energy Resources, to achieve the objectives of the company. The stock option plan is a basic, unapproved stock option plan which is not intended to qualify for HM Revenue and Customs in the UK, and which complies with the rules and policies of the TSX Venture Exchange. The number of authorised but unissued ordinary shares that may be issued upon the exercise of options granted under the stock option plan at any time, plus the number of ordinary shares reserved for issuance under the outstanding incentive stock options otherwise granted by the company, shall not exceed 10% of the issued and outstanding ordinary shares on a non-diluted basis at any time. And such aggregate number of ordinary shares shall automatically increase or decrease as the number of issued and outstanding ordinary shares changes. The TSXV requires all listed companies who have adopted a stock option plan which reserves a rolling maximum of 10% of the number of shares issued and outstanding on the applicable date of grant to obtain shareholder ratification of stock option plan on an annual basis. Copies of the option plan are available at the registration table. And I table the stock option plan of the company and ask the Secretary to file it with the records of our meeting. Phil Gardner, would you kindly introduce a motion proposing that the stock option plan ratified by the shareholders at the last annual general meeting be hereby ratified, confirmed and approved?
It's Phil Gardner and I'm a shareholder of the company. I move that the stock option plan of the company be ratified, confirmed and approved.
Thank you. John Fife, would you please second the motion?
Yes, Mr. Chairman. My name is John Fife. I'm a shareholder of the company. I'm pleased to second the motion.
Thank you very much. Any discussion on that? All shareholders in favour of the motion, please. Sorry. Yes, please. Certainly.
Okay, I would like to ask a question. Given the options that were awarded last year, which were not insignificant, would it be the board's intent to show restraint this year with stock option awards, unless there were significant achievements that were equally represented back in the share price before doing so?
Well, I think that the scheme is in itself self-limiting by the 10% rule, and we're always going to stick within that. I think I wouldn't rule out that further options will be granted as appropriate. Remember that it's not just the senior people in the company that get the options. We use them particularly for the incentivisation of staff and consultants, and I think that if we don't continue to do so, we'll lose a competitive edge that we have from doing so. It's a major motivational force for people working in our industry to know that they've got something that may be of value in the event of upside. So, I mean, the short answer to your question is that I can't rule out that we'll be awarding more options. That's why the plan's there, frankly, so that we can use it for what it's designed for, which is to incentivise staff. But within the context that we can never grant options such that the total outstanding options exceeds 10% of the share capital. That is the anti-dilutive protection that's built into the plan. Greg, as chairman of the Remuneration Committee, do you have anything to add to that?
No, sir.
Okay.
Yep.
All shareholders in favour of the motion, please signify by raising your hands. Shareholders against the motion, please signify by raising your hands. The motion is carried. And now those against.
The motion has not carried by a show of hands, so I'd suggest conducting a ballot.
The vote this time, forgive me, I think the second time round it was slightly different. But okay, so the motion is not carried on a show of hands, so now we call for a ballot. And I can tell you that the motion will be passed on the basis of the votes that are already lodged by proxy, but we will hold a paper ballot if appropriate. Perhaps our scrutineer would guide us through this. Okay, so, all right, so, sorry about the delay, but before I put the motion to ballot, I'll first record for the benefit of the meeting that the management hold proxies representing 10% of the votes that may be cast. All of these proxies will be voted in favour of the motion. So a poll by ballot is now required on the motion before the meeting. I remind you that only registered shareholders and proxy holders will be entitled to vote. And the scrutineers will now distribute ballot papers to all registered shareholders and proxy holders who want to complete one. Just a reminder, if any of you here have already completed proxies, you should not now complete a ballot as well. Does everyone who needs one have a ballot? So please indicate on that ballot whether you're in favour of or against the resolution. And please sign the ballot and print your name on it. All right. What I propose we do, it's going to take the scrutineers a little while to add up the exact numbers, but in view of the fact that 96% of those voting, in other words, the proxy votes, are in favour of the resolution, there's actually no doubt that it will be passed, and with your agreement we'll move on to the rest of the meeting and I'll give you the exact figures towards the end. So we'll actually keep the meeting open officially, and Rupert, I think I'm going to hand over to you now and ask you to take the meeting through your presentation.
So, welcome once again. Hope you can hear me. There's a lot of equipment and wires and TV screens and everything else, so I'll try not to fall over and wave my hands around too much. I've been told to switch this on, otherwise it won't work. So I'll do that. What we have for you is a relatively short presentation taking you just a little bit of history, but all the way up to where we are today, what the plans are. You'll have seen it in public domain. I perhaps give fair warning, we can't talk very much about some of the details here because it's still subject to confidentiality agreements and so on and so forth. We will try to answer questions, but please bear with us when we say, well, I'm sorry, that's still confidential, because we wouldn't be doing ourselves any favours if we start to blurt this stuff out at the moment. I'm sure you've all read that. I hope you have and you understand it, and it's all very clear. So, the strategy for Bentley. A plan that allows us to retain control of our own destiny. MOUs in place with development partners, those you've seen so far. An important feature of this is to minimise our upfront cash requirement. So we're not taking costs out of the programme, we're actually minimising our own cash requirement. And that's an important thing to allow us to move forward. The EWT, as you know, very successful, de-risked the reservoir, and we're now going to de-risk the project execution, which is a very, very key part of it. Through further engineering in both to de-risk both cost and schedule. And that really is a big mantra today about de-risking, which gives us a much greater handle on what we need to do. We have support of DEC and the industry, and I'll come on to that. We have a licence extension to the end of 2016 now, which was after much discussion and a lot of help from DEC and support. We're very pleased with that. And obviously so far we have AMEC, Arup and TK signed up. As we go through this, we will increase the attraction of Bentley as an opportunity. It's one of the largest undeveloped fields in the North Sea, as Tim mentioned. It's very well appraised, very well understood, and it's development ready. Yeah, the more we go through this programme this year, the more we will increase the attraction of the opportunity. And I think very importantly, keeping all our options open. Yeah, so nothing is off the table. We will continue to keep it that way as we move forward. So a bit of history. Where have we come from and where are we today? You've seen the gradual increase in resources and reserves over the years. So going through the 5-well, 6-well, and the 7-well. I can't really stand in front of this because you'll get a shadow. But so each well programme has given us an increase as we go through to 7-well, the EWT. In terms of valuation today, we sit at about 2.1, 2.2 billion NPV 10, i.e. the discounted cash flows after tax. Very important to understand that's after tax. Some people talk about it before tax, which is a bit of a red herring. About $8 a barrel today in the ground. What does that mean in real cash terms? For example, 29 billion of revenue coming off the field, 16 billion pre-tax, and about 7 billion post-tax. So the NPV is a measure of value of time, value of money over time, but a very substantial field, very substantial revenues, and obviously a long field life, 35-year plus field life. So that actually erodes your NPV over time, but an important measure actually of generation of cash flow from the field as well. It's only a guide. Industry transactions will take variety of different forms. With a historic precedent, industry starts at NPV 10 as being a measure of valuation, but as a guide only. So I think we've done a good job to get ourselves to a point at this point in time. This is the I told you so slide in a way. All the major issues that have been thrown at us to answer, and which we have answered very successfully, I think, as we've been through and de-risked the reservoir. Is the oil there? Will it flow? Will it flow at commercial rates? How does the water behave, the underlying aquifer? Very, very important for longer term production. Can we actually drill and complete the wells to make the field economic? How do we actually process it and bring it to surface, and actually get it to market. All very important things. You can have a large puddle of oil, but if you can't do all this, then you have no value. As we've been through the farm out discussions and the partnering discussions, all of these things have been scrutinised extensively and have not fallen over. I've been through many, many due diligence processes with people, with industry partners, with banks, with others. Bentley stands up very robustly. Recently proven by the MOUs with our partners, with the sale of oil, the sale of data to Statoil, and clearly proved for them, for their purposes, to be very, very valuable data. And that was an unprecedented industry transaction. It's been logical, it's been systematic, and this represents now one of the most de-risked fields prior to development. Some perspective, where do we sit in the North Sea context? In terms of proven fields reserves, we're number 5. So fairly large puddle of oil, as I say. In terms of the productivity, at peak productivity, we would be number 2. Even after 17 years, we'd still be number 4 or 5 on there. So it's an important North Sea asset, and it obviously represents a significant source of wealth for UK PLC for the next decades to come. Just looking back briefly to 2013, that's what we set out to achieve. All of those ticks in the boxes. Some of it remains subject to confidentiality, as I say, but essentially moving forward on the plan. The farm out process started. I would suggest to you that it has evolved, as have we, into a broader process to find a development partner, which includes others apart from major oil companies, against a backdrop of very changing and difficult conditions in the North Sea and elsewhere, cost pressure, resources pressure, and essentially people looking elsewhere for their investment at this particular time. All of that has been reflected through in the Wood Review in some shape or form, and that was quite a timely piece of information as far as we're concerned. It talks to a number of these issues quite well, and I suppose alludes to the fact as well the oil and gas sector, as far as the financial markets are concerned, is out of favour and has been for some time. We have not stood still. We have, I believe, recognised that this is an issue. And towards the end of last year, some hard thinking about how do we adapt this, how do we change, how do we still actually maintain the momentum. The result of that is the engagement with the industry service providers, as you've seen. That has been brought together very quickly, very successfully, and we've got a lot to build on in this programme. I think the key takeaways here come back almost to de-risking where I came in, and I'll talk about this a little bit more in a minute. But having de-risked the reservoir, we're now seeking to de-risk the cost and schedule. through engineering with our partners. So engaging with these people at the outset, they believe this is an attractive opportunity for life of field contracts on a risk-reward basis, and you've seen that in the press releases. But it's an important thing to go through that engineering with them. So it's not like a conventional approach that you'd have with a major oil company. This is a field you'd normally only find in a major oil company, where the whole contracting strategy would be very much turn up on the day and we'll pay you a rate, and that's it. You'll do what you're told. And we're seeing at the moment in the North Sea and elsewhere big costs on pressure on costs, conflicts arising, overruns, delays, and so on and so forth. And I'm sure you've read about those. We are going to do it slightly differently to make sure that when we are ready to go with FDP, that we have a thoroughly engineered program, and we hope to avoid some of these more obvious pitfalls. Statoil and Shell, on your minds, I'm sure. This has been a long-running relationship now, cemented, I think, quite firmly when they bought our data last year. They bought that for a reason, because the Bressay field to the north is very similar in terms of oil quality, in terms of type of reservoir, and having acquired the data, obviously we've been working with them as well to interpret it for them, to help them. But at the moment, it's a broad collaboration agreement which we will continue to work within to move towards really attaining synergies from an area play development. That's no more than public domain. I believe we have a very good working relationship with them at a number of levels, and so we'll keep people informed, we'll keep the markets informed of whether anything will come from that. But I'm afraid there's not much more I can say at the moment. It's a good relationship, and we're enjoying working together. Okay, so key messages here, I think. Quite a lot on this slide, quite busy. The blue box here, the blue dotted box, headed up technical and financial capability, that's what we have to demonstrate to DEC and indeed to ourselves, to our investors, and to our partners, our development partners, that we have, which means that we have a good technical plan and we have the money to put it into practice and bring the field into production. There are a number of routes to go within here. The Bentley Development Group down here, currently AMEC, TK and Arup, they will deliver from a technical solution. The structure we put in place here provides the opportunity for risk reward, i.e. that they believe in this project. We will move ahead this year and create the right contractual arrangement to hopefully achieve that risk reward. And that says, in essence, that we have a large asset. They would like to be engaged with that asset. It has strong cash flows, as I mentioned. So how do we ensure that both sides get the best out of it, and that we actually use the strength of the asset, strength of the cash flows to help us actually get into production? The operating group on the right-hand side, duty holder, drilling service, operations, maintenance, more conventional type of approach here. But even down that side, there's an opportunity for risk reward, which all leads to taking away from Xcite the initial cash burden. And that's what the overall objective of this plan is, of this structure is today. Nothing rules out the red box here, a joint venture partner. We're keeping XER a clean vehicle for funding, clean line of sight to deck, and nothing precludes a conventional joint venture partner as we move forward. And coming back to my original comments, the closer we get to funded FDP, the more attractive the opportunity becomes. And from our perspective, the conversations would move from we need your money so we could get into development to we are going into development, would you like a piece of the asset? Would you like to buy a piece of the asset going into production? Very different dynamics, very different negotiation. And I think from our perspective it's important for shareholder value to make sure we keep those options open. And that's quite a complicated slide. Are there any points on that I can answer straight away, or will hope to answer anyway? Okay. Where do we go to now? So just one or two other things on here. No, actually, I will leave that until we come on to the latest slide. Cash profiles, oil production. As I said, a long field life. You can't actually see these numbers very well on the bottom here, but it's a 30, 35, 37-year field life. So long field life. That's the reserves at the moment. The next 20 years actually represents the 50 million barrels of contingent resources that we have in the reserves report. It actually goes on another 20 years to over 50 years field life. That's constrained or limited at the moment by the facilities life of 35 years, notional 35 years facilities life. Our intention is to bring those barrels forward in time through optimization and EOR. Some will be optimization, some will be EOR, and on top of that number is an element of EOR as well. So that's totally confused you, I'm sure. We've got 250 million barrels of reserves. We've got 50 million barrels of contingent resources. Bring those contingent resources forward in time. You would book them as reserves, 300 million barrels reserves. On top of that is EOR, which we're working on still at the moment, and which so far indications in terms of laboratory work are positive. And that'll be part of the program in phase 1. So long field life, robust cash flows. 12 months into production here, we're running about 20,000 barrels a day, which equates to about $600 million per annum of revenue, being conservative. After 24 months, we're at 35,000 barrels a day, so north of $1 billion of cash flow generation per year. That, as I said, lends itself to engaging with industry service providers to take advantage of cash flow after oil is being produced and take away the initial cash requirement for Xcite. An even more complicated slide, but a very, a very simple message, which is de-risking again. This is a normal oil company program, which takes you all the way from prospect into production. Each one of these is a gating item, and obviously depending on how fast you can actually move will will actually determine how long each of those steps is. We conventionally would sit here in the red dotted oval, and that's where you'd normally go for FDP. So you'd define your development plan, you'd select it, you'd get FDP approval, and off you'd go. Typically, that would put you at around a Class 3 definition in terms of project cost. I think that's, from our perspective, that's actually fairly low because of the work we've done on the EWT. So bear in mind, the EWT was a mini production scheme in itself. It wasn't a conventional EWT. It was a long-term constant flow production test, which represents mini production scheme. So I think we're above that at the moment. But what we're seeking to do is to move ourselves up to the green circle, which certainly puts us up in this Class 2. And for some of the things that we're going to be doing, for example, the FSO, very high degree of certainty on what we need and how we're going to make it work, because we've done it. We've actually proved it in the field. That, I think, is a big step forward, and comes back to the de-risking element, to define costs, to define schedule, to define execution risk before you actually push the button and start spending money. And you're doing it with your partners. You're not doing it in isolation. So the oil company telling the contractor to turn up on the day and do this. And many of the problems that people encounter, which you can see almost every day in the press if you follow it, is because there isn't proper definition, which may be a function, for example, of the fact that they just don't have the sort of information and data that we have on Bentley from the EWT. So it's no surprise that we're able to move ourselves up much nearer to execution phase and de-risk the project. Very important part of what we're doing with our partners right now. So what does it look like? You've seen a few diagrams, I'm sure. This is the evolution of what we have. Phase development, phase 1 and phase 2. A couple of significant changes to the equipment we're going to use on phase 1. The first one being a self-installing platform, which is the yellow pit you can see there, which I will explain a bit, and also the round FSO, sometimes known as a biscuit tin, sometimes known as a donut, but it's a very good piece of kit, as opposed to using a ship-shaped vessel, which needs turret, moorings, umbilicals, flow lines, all sorts of very expensive capital equipment that we would have to pay for. This actually needs none of it. It's bridge-linked to the platform. It's moored by these simple chains here. It is actually bridge-linked, so we don't need subsea flow lines and all sorts of very expensive kit that goes with that. So the platform itself, tried and tested in terms of design and used elsewhere. The concept works well for us in terms of upfront investment, because it's easily transportable into the field. It's like a jack-up rig. 24 hours later, you're jacked up, you're installed, and you're ready to go. It represents a mobile asset as opposed to a fixed platform that you pile into the ground. You spend hundreds of millions of dollars, and as soon as you pile it into the ground, it's scrap, and it's worth nothing. All it is a liability. Again, hundreds of millions of dollars to actually deinstall it. So it's mobile. It has the potential to be asset financed because it's mobile. So if all hell broke loose and you got out there and the oil had disappeared, it's all right, it won't, don't worry. It's been there for a few million years, it's not going anywhere. But if the worst happened, you could actually jack it up again 24 hours later and float it off somewhere else. So it has asset value and can be financed in that way. Other important things, you don't need heavy lift vessels to install it, which is a major part of any installation plan and timing particularly. And it's designed for decommissioning. So end of field life, you don't need to come along with heavy lift vessels and very expensive kit and actually get it out of the ground again and take it away and actually dismantle it. It's exactly the same in reverse. So the decommissioning liabilities you have, which is a big topic at the moment in the North Sea, are much, much lower. So again, for Xcite, very, very good use of an asset to actually reduce our upfront costs, or cash rather. The FSO itself, so again, just to repeat what I just said, that very good use of an asset as far as we're concerned. It will take away the upfront cash required for the turret, the mooring, flow lines, umbilicals and so on and so forth, and will be 100% lease package. Yeah, so again, we're taking away the requirement that we have for upfront cash. Actually has better motion characteristics for dehydrating the oil. It bounces up and down less than a ship would. And because of the bridge link and because of the surface area that you have on top of it, it's possible that we could transfer some of the equipment on the platform to reside on top of the FSO. And again, that would be a good use of capital that we don't have to spend because we convert that into a lease rate and would actually give us much more flexibility on the platform to do other things, which could be quite useful. So that's a little bit about the equipment and the process that we're going to be using. Steve, I hope now can take us through how it works. We have a little cartoon for you. So Steve, do you want to
just
talk us through how this is going to work?
I'm going to show you a short video of the platform construction, installation, its operation with the jack-up, and then also the storage tank being put in place alongside. This has been put together by Arup, which, as Rupert says, is not a unique design. It's new to the North Sea, but it's been used in other parts of the world, and it's a proven design. And we think it's going to be very efficient for the type of business which we're in for this thing. And we've actually designed the facilities to work with the crude oil. And what we've been doing is we've been designing them so that the heavy oil can dewater in the tank FSU as well as on the platform. So there's going to be a process and how the whole thing works. So we're going to be able to dehydrate and sell on-spec crude, as we did on the well test. One of the big learnings from the well test is how to actually manage the fluid in a very efficient way and use the facilities to work for us rather than put in a lot of unnecessary equipment. Anyway, I'll let the process go through, the film go through. So this is the Arup platform, and it can be built anywhere in the world, but we're focusing here on a construction yard, putting together a foundation and then building things. And much as you would build a tower crane, we assemble the platform in the vertical section and we lift up sections into it so that the whole platform can be built that way. And as I say, this is the way that they've built them in the past in other parts of the world. It's going to be about 20,000 tonnes. It's a fairly large structure, and then it will be taken on a dry tow to the North Sea, wherever we can build it. And we're looking at many different construction sites. It's important to find, with the engineering, how we can de-risk the whole processes as we're going through it to make sure that it can be done. So we see it coming to what we would call an integration site somewhere in northwest Europe, and we bring the platform in alongside, and then you could integrate. So you bring the modules onto it, which might be degassing, living quarters. But as Rupert indicated, we are looking at the functionality of the facilities in the field to try and optimise the functionality between the Savan structure, the round biscuit tin as he calls it, and the platform, and the self-elevating platform, and taking it to the thing so that we can balance out the facilities. The unit can then be towed wet to the Bentley oil field, and on arrival in the Bentley field, the base is lowered down to the seabed. It's held in position, then the base is lowered down, and the suction anchor gets to work. This is a suction anchor base, so it's about 60 metres square at the base, so it's a fairly substantial size unit. It goes down the seabed. Once it's anchored itself on the seabed, then the deck elevates up, and it becomes a stable platform at that point. Jack-up comes in alongside, so they bring the jack-up in, the rig, and as the rig approaches, we can do it. And then the rig, much as the Rowan Norway was working, but the Rowan Norway was working for us in open water. This is over a platform, so the rig cantilevers out over the platform. We're not saying this is exactly what we're going to do, but this is the directional engineering which AMEC Arab and DK are working with us on in getting it. And then we bring the FSO in alongside and hook it up, and you'll see that there are hoses between the platform and the unit. And then the FSO can offload to a tanker by firing a line across the messenger line, and we can offload parcels probably 600, 800,000 barrels at a time. This would be a 1 million barrel FSU, the TK unit, and the tankers offtake will probably be in parcels of 600 to 800,000, depending on what's available at the time. And then after the messenger pulls over the hose, it enables us to then take diluent on board the FSU, so we can have some diluent to mix and help dewater, help with meeting refinery gate specifications with the crude oil, and then send it back. So that's what the field looks like in the thing, with its bridge link across and the platform. We expect the jack-up to be there for about 5 years with 20 wells to drill, but we're still working on the detailed drilling and completion program. And that then will be the development field development. Partners who we're working with, these are the development partners. We're working with TK Savan, AMEC and Air Arab, and BP are the marketing partner, as you know. All right, Rupert.
Right, so just to round off then, some important work obviously going on this year with those partners to get ourselves in a position to submit an FDP. We will do that as rapidly as we can within reason, not wanting to push people or ourselves into something that doesn't quite work. Timings, I mean, as ever, when we offer an opinion or give a view on timing, it soon turns into promises, folklore and undertakings. So let's just be clear, this is our intention. It's largely within our control, but has to be with our partners. And we will work as rapidly as we can to actually get here. And timings here, the drilling rig we haven't really talked about, but it's going to be a very important part of the programme. And nothing can ruin your programme more than your drilling rig. And nothing can cost you money across the whole programme more than your drilling rig if that doesn't turn up on time, or indeed turns up early and you're paying for it, or turns up late and you can't drill. We're not doing pre-drilling here. We're going to drill through the platform, so the whole coordination is going to be very important on that. And so the drilling rig, we think, is perhaps the most important in terms of determining the underlying timetable. The other things fall well within inside that. Yeah. But as we said before, I think we won't be starting until we have a properly funded plan. Everything is lined up. Therefore, we don't seem we will try to avoid the delays that seem to be everyday news. And if I could just make a comment about value, which is clearly in everybody's mind, and none more so than management. The underlying value in Xcite lies within its ability to create and put in place a funded FDP. It doesn't lie with what the first oil date is. And that seems to have been something of a myth on certain websites and certain commentary forum. But just to repeat that, in my view, the value of Xcite is in a funded FDP. It's not when that next barrel of oil comes out of the ground. So I would offer you the view that first oil date is interesting, but much more important is actually getting this plan done and put to bed. So we have certainty. That will create the value in Xcite. So back to where we started. It's control of our own destiny. We've made a very good start this year with the partners who are already in place. We're looking to de-risk the project execution, both cost and schedule. We have support of industry. I believe we're increasing the attractiveness of the opportunities we go through this programme, leading to that funded FDP situation, and we'll keep the options open. Nothing is ruled out. Thank you.
Thank you, Rupert. Thank you, Steve. I think we'll just, if we may, just go back to the open resolution. So that's for.
Yeah. So just to explain, this is for votes for the motion.
Yep.
Votes against the motion.
Yep.
These are percentage of the
Yep.
total shares
And that's
voted
the
at the
total
meeting.
vote.
Those are the total number of votes at the meeting.
Okay.
So.
Thank you.
And the only, I don't know if you want to, the only one question I have is we didn't get a vote for this individual, so I'm not sure if we want to ask to make sure that whether they want to submit one. So it's Andrew Joel.
Joel.
Yeah. Just to confirm.
Okay, so the motion that was that we left outstanding while we had the presentations, which was for the ratification, confirmation, and approval of the stock option plan, the results of the ballot are that for the motion were 31,111,051 votes. Against the motion, 1,403,508 votes. Representing respectively 95.68% and 4.32%. The only query was that, from my scrutineer, was that he didn't seem to have a ballot paper from Andrew Joel, and wondered whether he wanted to vote. Is he here? No?
Okay.
Okay, fine. So, on that basis, ladies and gentlemen, the motion is carried on a ballot, and therefore I declare that the stock option plan of the company is hereby ratified, confirmed and approved. And I think what we'll do now is to close the formal part of the meeting and move on to give you an opportunity to discuss and question if you want to. So could I ask someone to put forward a formal motion for the closure of the business part of the meeting?
Yeah, Mr. Chairman, my name is John Fife. I'm a shareholder of the company. I move that the meeting is terminated.
Thank you, John. Could I ask for someone to second that motion?
Mr. Chairman, my name is Phil Gardner. I'm a shareholder of the company, and I second the motion.
All of those in favour, please raise your hands. Any against? Nobody against. So in that case, the formal meeting is now closed. The annual general meeting is terminated. Thank you very much for your attention. And now I'll give you the opportunity to ask any questions. If I could just remind you, please, to identify yourselves and confirm that you are indeed a shareholder. Go ahead.
My name is Paul Rutherford. My name is Paul Rutherford and I'm a shareholder.
Good afternoon, Paul.
Good afternoon. I'd like to ask some questions around the IP, if I may. So, in the well data sale, we said that we hadn't compromised the IP. And I'd like to understand, in terms of the IP, in what circumstances another company gets to understand the IP and what rights of use that will likely give them.
You, I think, Rupert.
IP. Intangible. Some companies have IP based on their technology, on their patents and so on and so forth. For Xcite, the IP rests in our people, Paul. And so what we said was the $15 million sale to Statoil and Shell was not infringing our IP. It didn't actually reduce the value of what we have, because all they get is data, useful data, but it doesn't, only goes so far in allowing them to use it. And without us and the work we've done with the last 12 months, it probably wouldn't have had much benefit. So, as long as we hang on to our people, and Steve and his team on the technical side, then that's going to be the key to it. And I think that, I'd like just to, if I may indulge, make a point there about the stock option plan, because I understand from where you sit, it looks like we're filling our boots and having a great time and sitting back in the office in Guildford and plotting against shareholders and seeing the best way we can get the most out of this company without giving you anything. But I can tell you that's not true. Management is highly skilled, highly experienced, and highly motivated. Why? Principally because we have a stake in the business. Some people have a bigger stake than others, but everybody is motivated by having a stake in the business. And as Tim pointed out, it's for people at all levels in the company, and I mean all levels in the company, have a stake in the business, which makes a huge difference. The Aberdeen market at the moment is incredibly difficult to recruit in. And I think without the option plan, without the ability to reward people in that way, we would probably very quickly lose people. And I think, therefore, it's absolutely critical. And also, I would be very disappointed if we couldn't continue to reward options when the share price is at an undervalue. Because what's the point of saying to people, yeah, well, hang on, we'll just get to where we need to be, and we'll get the FDP, and we'll get the funding, and we'll get the share price up, whatever that might be, and then we'll give you the option. Because what's the point of that? What is the point of that? I think people don't understand how these options work. These options are not inland revenue approved, which probably means nothing or very much to most of you sitting out there. But what it means is that when you award an option, there's no tax liability on it. So if you're an inland revenue approved scheme, you would be given that option and you would have to pay tax on it, which is not very attractive for most people. Our scheme is the other way around. So when you exercise the option, the tax liability falls in. But if there's no value in it, we don't get. If I get options at £1, I don't get £1. I get nothing. Yeah. When the options go up to £1.20, I get 20p of value, on which I pay a hefty tax. Yeah. So giving me an option today at £1 or whatever the number is, 80p today, is irrelevant to me. But the upside is highly relevant, and that's why it's attractive to people. Yeah, because they don't pay for them now. Obviously, they pay tax in due course when the value goes up, but they will work to getting that value up. Yeah, so giving people options when the value's gone up is a waste of time. Absolute waste of time.
I do understand that. I don't really want to dwell on that, although...
Well, I did, so forgive me, indulge me.
No, that's okay.
Yeah?
But I really wanted to understand with the IP. So, for example, if somebody farms in later this year, should that happen, what rights would they likely get with that IP? Would it just be on the development of Bentley? Do they get to understand what the IP is? I've always understood it to be a process, a non-patentable IP. So how does that work? Do they get insight into it, or in farming in, are they just buying into future barrelage from which the IP benefits them?
Well, I say for Xcite, the IP is not on a piece of paper in a patent, it's in its people. A conventional farming would allow people access, obviously, to all the information and all the people and all the expertise. And that's, you would absolutely expect that to happen.
It is a know-how. It is not a patentable IP. It is knowing how these wells flow, how the dehydration processes can work. It's how the whole behaviour and be able to model and demonstrate it, which led us to the successful EWT. It is something which someone farms into the field would pick up, because that would be our recommendation to get the maximum out of the field. They would take advantage of it. But it is also ours, which we can use the know-how in other opportunities if they arise in the future.
Well, just one other question following on from that then. I don't know if this is a silly question or not, but I'll ask it. So, allegedly the Bressay development costs in the public domain have been stated around $7 billion. I think that's correct.
That was before the shutdown on that programme.
Yes. And I think our development costs have been quoted at $3.4 billion. So, in my own head, logically or not, I've gone a $3.6 billion difference, and I think they're quoting a mean of 250 million barrels, which to me illustrates a cost saving, a potential cost saving, in working with Xcite of over $14 a barrel. Am I being illogical, or does that make sense to you?
I think they are rethinking their development of Bressay, and I can't speak for them, and they wouldn't want me to, but I do know that they are doing some rethinking.
In my mind, that totally transforms the potential value of Xcite Energy shares, phenomenally so.
It's their business.
Thank you.
Hello, my name's Ron Smith-Gaylor. I'm a shareholder. It follows on something from Paul. It just, I was hoping that Barney Brennan would be here because he's a bit of a media star at the moment. He was in Houston in April, polymer flooding. I'm reading from something because I can't remember this stuff. And in the DevEx, unlocking offshore heavy oil, a case study of the Bentley field. Now this, I would assume you get fees, whatever, and you're putting out the company. So it's in the public domain to an extent, unless they sign a confidentiality agreement, I'd imagine. So all the people who were attending are told a lot more about Bentley than we know. Now, a few of us are oil experts, but Barney not being here, I suppose he's back at base with the chemistry set, yeah? Or the laboratory, as Rupert calls it. So my question is, could his boss, or perhaps you're not his direct boss, Stephen, could you perhaps give us what they call what's the word they use nowadays? An elevator pitch about what Barney is saying to the experts. Could you do that?
Okay. Well, there's two different papers you're referring to, and I'll take.
Same to me.
They're not exactly the same.
No, but exactly.
The first one you referred to in Houston was a specific one on the chemistry of polymer flooding EOR. It's a very complex process about how polymer sweeps through porous media, and it's to do with the effectiveness of some trials which we have done in conjunction with various contractors, and particularly the University of Texas. It's the structure. It's been a successful program for testing out chemistry, and at this stage, though, what happens in a laboratory has to be taken into the field, and the only way to take it into the field is to put EOR into a pilot plant. And so what we would intend in part of the first phase of development of the Bentley field is to do a pilot trial on the Bentley field, and DEC will insist on us probably doing that. Maybe not at the start. The first thing to do is to get the cold flow working as a process, but the second part later on in the field life will be to start doing some EOR trials, and eventually there may be a new platform down the way to try and access the barrels which are not being addressed in the first phase cold flow production. That is beyond the 250 to 300 million barrels Rupert's already referred to. So that is the Houston paper, and I believe that one's available. The second paper is a Society of Petroleum Engineers peer-reviewed paper. It's presented at DevEx, which is an annual conference of the Society of Petroleum Engineers, and Barney is talking to his peer reservoir engineers and geoscientists about how the Bentley field works. The paper is available to access. I'm not sure if it's on the website, but it's available from the Society of Petroleum Engineers. It's downloadable by anyone. It's just pay a fee for it. The description of that paper is a description of the reservoir, understanding what we've learnt from some of the well tests and how that has been integrated into a development plan. It is primarily, though, the well test, and it's to do with the process of analysing the data. And we have been, as you know, through an exercise of farming down the field and demonstrating it. So we've had to show a lot of potential oil companies the data, not necessarily giving them any rights to that data, and we've very carefully put some information out there describing the well test, what it actually did, but it doesn't give away all the details of what we're been up to. I hope that's a sort of a bit of an understanding of what it.
I suppose at the end of it, I'm saying, from what we hear, so the extended well test wasn't a be it to end all. It's work in progress.
It's getting near to the end of the evaluation phase of it now. There's the physical time of the test where you are manipulating all sorts of things, and you're turning the temperature up, turning the pressure up, you're adjusting the various chemistries, you're putting different amount of emulsifiers in the thing. But it's after the test when you're doing all the analysis, which takes a long time. It's a year, 18 months of time we've been evaluating it and building computer models to try and optimize the field development.
Do you get much feedback from going to these seminars, symposiums, whatever you want to call them?
There's a lot of peer process in the industry. The industry works a lot on peer processes. Yes, we do get value out of it.
But I think the answer to your sort of the point you came in on, it seems to me that we can quite clearly say that we're not sharing information with people that we're not making generally available, and we're certainly not sharing information with people and withholding it from shareholders. Because, Steve, you say the papers that you've referred to are both publicly available documents.
Exactly,
yeah. So it's definitely in the public domain, this information, if you seek it out.
I'm not looking after 60. I'm trying to get some kind of a feeling of how well it goes down. Does Barney get laughed off the stage?
No.
What a load of old rubbish. That's what I'm saying is just something you say in general terms. Perhaps you can't. I mean, I don't.
He's a very thorough person. He goes into great detail, and he's well appreciated by his peers.
And you'll never hear any laughter at an SPE meeting, I can tell you.
No, I can imagine. That's why I said an elevator pitch, and then Stephen Hughes went a little bit too far. I don't need that level of detail. I'm wondering just to get an impression of, because to me it's a teaser. If you can get people interested by showing the technicalities, it filters through. Sometimes you get a phone call. So and so, one of my guys was at it. Can we?
Yeah.
It's that type of thing. So it's all part of the process, I suppose.
Yeah.
I mean, I think it comes back to the underlying credibility of what we've done in the well test.
Yeah, it's important.
Actually, and you know, it stood up very well. And I mean, EOR is something, as Steve says, that is so far laboratory tested, and we can't do anything more really. Actually, until we get out in the field, we'll be advancing a little bit. But until we actually get out in the field and actually put some polymer in the ground, I mean, do you know how it works? This stuff. Basically you're injecting it into the bottom of the oil leg. So we've got a 120-foot oil column. We've got a 400-foot underlying aquifer, which gives us the pressure support we need. Yeah, you put the wells in the top of the reservoir initially, and you aim to get the water to push it all up out. If you inject polymer at the bottom, it combines with the aquifer water and creates a sort of wallpaper paste. So it makes the water sticky and viscous, so it doesn't come up so quickly. And if you can create that sort of impact effect, you hope to get more oil pushed up by this wallpaper, this sort of sticky barrier, basically. But obviously, until you get out there and you put the wells in and you see how it works, you don't know for sure.
But can I just try to put this in perspective for the non-oil specialists here? What we're talking about is not the original production Steve called cold water or cold production, cold flow, of the 257 million barrels that's proven reserves right now. You're talking about a theoretical either secondary or tertiary recovery of an incremental 50 to possibly 100 million barrels later on after initial production, because it's all laboratory testing and research and R&D, and Barney and the rest of his geologists and geophysicists and engineers and everybody are working on it. It's shared information to try to apply onshore polymer EOR production into offshore heavy oil for the first time. For the first time. So it's I just want everybody to understand it's not really that important today and for the foreseeable future in terms of developing and bringing into production the first 257 million barrels. But it's something that is there as a free option, essentially, for another 50 or 100 million barrels. and part of the intellectual property that you were talking about earlier. This is part of it. It's part of the process. It's part of the team that you have in front of you that has created $2.1 or $2.2 billion of proven reserves today with upside through other means, including the EOR.
Next.
Good afternoon. Michael Eleftheriou. I've been a shareholder since July 2010. I'd like to ask the specific milestones which will lead to the submission of the FDP. So it was the penultimate slide, I believe.
Yeah.
So, ideally, the timing also, the targeted timing for the submission of the FDP, but if not, perhaps the milestones.
Well, I guess the milestones are closely associated with the work programme down here. We need to get the contracts agreed with our partners. We need, in parallel, to create the right funding structures and find the right financiers for that, which is all in the melting pot at the moment. We need to do the engineering work, which actually goes ahead of those contracts. So when we sign a contract with these people, subject to FTP approval, we will have everything nailed down in terms of the engineering, how it's going to work, what the risk-reward structures are, and so on and so forth. So overall, that's what we're hoping to do this year. But as I said before, I'm not going to turn an intention and undertaking into anything more than that right now. There's a lot to be done, and if we can get it done this year, we will. Yeah. So once we've got that done, and we can go to DEC and we can present to them. Let's go back. We can actually present to them all that's in the Bentley Development Group and the operating group, everything we need to kick it off, and we can demonstrate technical and financial capability, we can get FDP approval. Now, obviously, we'll keep DEC informed as we go along, as we have done all the time. When we get to that point, there should be no surprises with DEC, as there haven't been all along, and so we would expect to get a good hearing with them at that point.
Let me ask a clarification. You mentioned also the tendering process for the drilling ring. Can this be initiated before the submission to the FTP, or does it need the FTP approval in order to...
No, that will happen in parallel. That will happen in parallel. And we are in discussion with several people, as you'd expect already. I've gone to that, yeah. So we'll make sure that will actually meet the timetable as well.
Richard Bradbury, another long-term shareholder. Just two questions. Firstly, are you currently in a closed period? Yes. Okay. And how long is that likely to last?
I think that in itself is a question which, if I answered it fully, would probably be. I think that let me tell you this: the announcement of our first quarter's results will be made fairly soon, and that is what is keeping us. That is the main thing that's keeping us close at the moment.
Okay.
It is in the nature of our work and our business that there is very, very often discussions going on with various parties about various aspects of moving this project forward, which mean that the directors and other senior members of the management team are in possession of undisclosed, price-sensitive information. And so, certainly since I've been on the board, the number of occasions upon which we've been open for any length of time have been very limited. May I ask you the reason behind your question, because it doesn't seem to me that whether we're close or open has much impact on outside shareholders.
Sure. Well, just to follow up from that, obviously we're all aware of Mr. Hughes and Rupert Cole's shareholdings in the company and the commitment that they put in, and also that, you know, I'd like to thank on behalf of many of us here, you know, particularly Stephen's work on getting Bentley to where we are now, you know, and that's much appreciated. Obviously, there's been some recent board changes. We've got 2 new members on the board in front of us today, and I think a demonstration to the market, a bigger demonstration to the market in terms of belief, commitment, conviction going forward would be some commitment in purchasing shares when we're out of the close period. And I think that would be well received.
Well, I understand what you're saying. I think that, I mean, clearly we can't make a public commitment to buy shares, because that of itself would be could be misinterpreted and might affect the price arbitrarily. The directors of this company have a substantial investment in the company, particularly the founding directors. Some or all of the non-executive directors also have a stake, including myself, which is not nowhere near the founding directors' involvement, but is nevertheless not insignificant. The intentions of my recently appointed colleagues, I couldn't speak for them, but I think all I can say is we understand what you're saying. We agree that the involvement of the directors and the evidence of their commitment is important.
Hello, my name is Cathal O'Connor and I'm a long-term shareholder. My query is, you have financial advisors, Rothschilds and Jefferies, are they still employed by you? And secondly, just on the contracts that you're drawing up, are you giving a percentage of the field, or are you giving a percentage of future profits to the companies to come in to help you develop it?
Well, Part A and Part B. Part A, yes, Rothschild and Jefferies are still there. It's an ongoing program. As far as the field and the profitability and so on and so forth, we will not be giving equity in the field out to the partners. That's not the objective. On both sides, that's not desirable. We have yet to formulate the exact nature of the risk-reward, but if you focus towards what the field will deliver in terms of cash flow and underlying profitability, and asking people to bear some element of the costs to actually get you there, that's actually directionally what we're hoping to achieve. So we retain 100% of the asset in that situation.
Just at the last AGM that we had here in Paris, you were saying that to develop the field, we've got 750 million.
Yeah.
You had resource-based lending of about 350 million. So you're expecting the people who come in with you on this, are they going to fund the remaining, or have you got other methods of doing that?
We have a number of routes to goal in terms of financing, each of which will be explored over the next weeks and months. The objective is to take away as much of that 750 as we can through the partnership relationships, through the asset financing route on the platform, and one part of the financing route could be the RBL. So there are quite a few options to financing that we have, and we'll be looking at those in the context of the structure we want to put in place and the underlying asset value, both in terms of the field and the bits of equipment that we put on it.
So would you go for a rights issue?
Would I go for a rights issue?
Yeah, like would you go to dilute the share, go to the shareholders?
I'd rather not if it's okay with you. Honestly, I mean, we have asset value in the field, we have asset value in the equipment. I'd rather not.
You're not ruling it out.
I'm not ruling anything out at the moment because, in terms of structure, in terms of end result, the important thing is to get us to that funded FDP. But in terms of a conventional rights issue, it would be pretty unusual to see that in the context of our shareholding base.
And what about some of the oil companies raise bonds or Gulf Keystone?
Others too. Well, again, there are a range of financing options that we're looking at. Yeah. So.
Thanks. My name is Bob Taylor. I'm a long-term shareholder. Rupert, can I just ask you a little bit more about the money question that you were talking to there? We all understood from last year that we were looking for about $750 million to get to a point of production, and that was an often discussed figure in 2013, with roughly $400 million from reserve-based lending and $300 million from a farm-in partner, which was I guess, route one at the time. Are we back now to a situation where, because we haven't been able to pull that off in a timescale, we're back now to a kind of reconfigured Bentley alliance as was 2 or 3 years ago, and looking to have commercial contracts with our partners replacing the equity in inverted commas contribution that would have come from a farm-in partner? Is that the objective?
In a word, yes.
Thank you.
I mean, the alliance. I mean, the alliance has been around and has been talked about. I mean, the alliance model has moved now. I mean, the alliance model was probably transferring too much risk, I think, to the partners, to the other people, saying, why don't you develop the field for us, as opposed to what we have now, which is development partners. I know we're not not trying to play semantics with you, but it's a different structure where the partners will remain comfortable because they are taking a risk on what they understand. So at TK and Savan, it's the FSO, and that's what they bring to the table for us. But yes, it's a re-engineered solution that aims to take upfront cash out, not cost, but upfront cash out. So, for example, the FSO, we use a ship-shaped vessel. We need to pay for a conversion, a turret, moorings, umbilicals, flow lines, all this stuff, which is very, very expensive. If we use this unit, we don't need that. So immediately we take that out of what we would have conventionally done if we had a very large checkbook and we said, okay, well, how much do you need? Let's write the check and off you go and spend it. So it's restructured to actually minimise that upfront cash requirement. Put the emphasis on what the field can deliver in terms of cash flows, and people becoming comfortable with that, which we believe some of them have, i.e. those that are on board already. And then understanding what structure we have in place, what we can take out of that upfront cash from those partners, and then how do we fund the balance, which I'm heavily focused on leveraging the assets.
So the engineering design that you and Stephen took us through earlier on, is that actually a lower cost engineering design than you had in mind 12 or 15 months ago?
Not necessarily.
Is that
what
you mean by cost question?
No, it's just that I'm not going to answer that yet because we haven't been through detailed engineering. But directionally, I wouldn't expect it to be materially different. It's just, rather than this fixed platform lump, it's an asset. We can asset finance it. Serves the same purpose, clearly, but has a lot of advantages for us.
Okay, so is it just that the cost is phased differently then, rather than it's a different pounds amount or dollar amount?
More, well, it's not a different cost per se. It's just how do you finance that? It's actually saying, well, which element of that cash flow can I put back in time rather than writing out a cheque today?
Okay, thank you.
Yeah. If I understood well, what you said at the beginning of the presentation is that you're trying to take us to a situation where the involvement of, let's say, a farm-out party becomes a nice-to-have rather than a necessity to where we compared to where we used to be before. Mm-hmm. So the various financing arrangements that you are contemplating in terms of revenue sharing in the future in exchange for reduced, is that where you're trying to get? So to remove the need for the, for a partner?
Yeah, absolutely. So again, comes back to controlling our own destiny. I don't need you anymore, but if you want to come along because it's FDP approved, it's done, we're funded, that's a different conversation, and actually that's a different mentality for people to make a decision upon as well.
It's a split question. So if last year you mentioned that we could raise 400 million through the recourse-based lending, but we were capped because of financial leverage. Mm. Do you think the fact that within a year the market cap has come down, is that a constraint in how much we can raise from the banks?
I think I probably talked about 350 million last year rather than 400. That would have been a bit toppy. Okay. But anyway, I'm not going to split hairs with you on it. The RBL is really only based around the cash flows from the asset. Mm-hmm. But obviously within that RBL, you have to make sure you've got overall funding for the programme. So the market cap is almost academic.
Okay. So financial leverage, it does not come into it. That was my understanding.
Not as far as the company's concerned. It's all about the asset, but obviously you still have to demonstrate that you've got the overall funded programme, to have the RBL. Mm-hmm. Okay. But as I say, there are a number of alternative fundings that we're looking at the moment. So,
thank you.
I think you had a question.
Thank you very much. Paul Crony, long-term shareholder. You alluded earlier to the 15 million that we received from Statoil share as unprecedented. I believe also with that there was a subsequent milestone that when they reach something there would be an extra payment of 1 million. Do we know what that subsequent milestone is?
We know, yes.
You're unable to tell us then.
I suspect that's still under the confidentiality.
Yeah, it's. I wouldn't be overly concerned about it.
Okay.
We're not.
Right. So we're not going any further on that.
Well,
Okay.
I mean, we are still bound by the confidentiality agreement with Statoil. Strangely enough.
Okay. Secondly, as a somewhat uninitiated shareholder perhaps, at last year's AGM you alluded strongly to a full dance card. A lot of interested parties to the data room, essentially. Sitting here possibly still somewhat uninitiated, it appears that you've been obviously waiting for the joint venture partner perhaps to come along. It hasn't been forthcoming, so we've had to head down this route. Are you disappointed that a joint venture partner hasn't come in at this point? And was it the case of you could only wait so long that you had to proceed?
I wonder if the dance card would come back. We saw which way this was headed fairly early on because of the feedback in terms of what the North Sea and the Wood Report and the whole thing. So we certainly didn't sit there and wait and twiddle our thumbs. We actually created the strategy fairly early on. Now, the important thing is we don't preclude a potential farm-out partner going forwards. And yes, of course, we're disappointed, but against the backdrop of the North Sea and major oil companies and so on and so forth, and bear in mind, we do need a major oil company here. We're not talking about, independence here to help us along. We need somebody with substance, which we get with these partners. So if this field was sitting in a major oil company, these were the guys who'd actually develop it with you as well. And AMEC do, 60% of North Sea operations or whatever, and they are duty holders and so on. So we actually believe the guys who will get this done for us. There's no hiatus in saying, hell, what do we do next? No, we actually carried on and we sustained momentum to make sure that we actually do have a plan. And you can see, I hope, how it's coming together pretty well, I think, to actually take us forward to an FTP.
Just finally then, is it fair to say that there wasn't a joint venture put forward possibly and it was considered derisory by the board and turned down?
I'm not going to comment on that because it's an ongoing process. We're subject to confidentiality, and I really don't want to prejudice any historic or current or future discussions that we have. We are where we are. We're not precluding anything, and discussions will continue. And as we get nearer to the goalpost or the finishing line, as we call it, then we'll see.
You might not be able to. How many? Oh, sorry. Ron Smith-Gator again. Quick on this. You may or may not be able to answer. How many confidentiality agreements have we got?
What, in the company, Ron?
No, not between you.
Look, no, I'm not going to comment on that.
Okay, well, all right, one more go.
It's more than one and less than 100, they are.
What's the difference between a MU and a collaboration?
Phew.
Well, you write the RNSs, so don't blame me.
A memorandum of understanding is setting out the framework under which we're going to go forward and negotiate a specific contract for a specific purpose. The collaboration agreement is essentially wider than that.
It means nothing?
It means a very great deal. This has been approved at senior level in Statoil and Shell. Talks to, what are the area play possibilities here? And this goes back yonks. We looked at Bressay years and years ago, and it's very rare to see two fields actually so close in geology and type of ore and everything else. So it's a clear area play candidate. And if you look at,
would you say the collaboration then gives them a kind of same position that you've got when you say you've got flexibility with the RBL, sort of different people coming in, different equity joint ventures? So basically a collaboration means it's open-ended. They can change their mind. They can...
As can we.
As can you, yeah.
As can we. So, and I like that.
Well, so do they then.
Well, do you want to get stuck behind Statoil with a 5-year time frame or whatever they're going to come up with? Do you want to be told what to do by Statoil?
But it's kind of sounding to me that they're doing, because they've got the muscle, they're kind of getting more out of it than we are.
Oh, I can assure you that that is not the case. This is very much a meeting of minds and a meeting of people who have, as much to gain and lose in all of this. And we are not developing Bressay for them. We are looking after our own interests. I can assure you of that.
I'd like to comment at this point. The collaboration is an absolute key word in the Wood Review. There are three elements to the Wood Review, but the collaboration is probably the key word. It's also probably the least understood word. And DEC are encouraging Statoil and ourselves and Shell as probably one of the prime examples where true collaboration can work. There's a lot of benefit. You only need to look at a map to see where Bressay is and see where Bentley is, to see that the collaboration in the area, in the development of the two fields, will be absolutely critical to reducing the costs of both fields. So you can read into it what you want, the word collaboration. That's what Ian Wood said last week. I was at a meeting with him last week, and he was talking about how misunderstood this word is and also how it means so much to different people. I heard the Department of Energy talking about it, but it's where you get a tripartite arrangement between DEC and two other parties. It's absolutely essential that there's a structure develops to get people working together, because it's lack of collaboration that's causing a lot of the problems in the North Sea at the moment. And there's a big pressure from DEC and from other parts as to what needs to be done to make people work together in a more efficient and effective manner.
Thank you. At the 2012 AGM, we talked about being the heavy oil partner of choice. Is that still a goal? And realistically, do we have the resources and time to pursue that?
I think we've demonstrated that we have quite a lot to offer people, both in terms of Statoil and others. I think I'd just probably reiterate what Steve just said. Let's keep the main thing the main thing. I mean, we're not going to seek to be the number one go-to heavy oil people, but I think by osmosis, if that's the right expression, but we are recognised, I think, now to some extent to be experts in heavy oil. I don't think it drives our strategy or forms a large part of waking hours. It's something that will evolve with time, and I think probably we've demonstrated that we are perhaps in that sort of box, but I don't think it drives our strategy.
And another question I'd like to ask is around dollars per barrel in the ground. In the past, in the heady days of early 2011, we talked about $5 a barrel in the ground being fair value. The target was 10 to 15. Do we still believe in that value? And was that $10 to $15 a barrel value? What was the benchmark for that? Was that for the sale of a company? Was that the output of that value? Sorry, I didn't explain that very well, but I think you understood what I was saying.
Well, I mean, coming back to what I said, what's it in the early slides here, that right at the beginning, I think. So, we sit here at about $8 plus a barrel in the ground on a P50 number on the base case. The industry precedents that are out there still, and there are various databases that give this, and various groups like Deloitte who plot it. Over the years, if you plot transactions, you get a range of about $10 a barrel for 2p. Now that can go up or down depending on strategic importance and what time of year it is and everything else. But I mean, that's the sort of range. Now, it may be 7 or 8. It may be 12 or 15. But it's only, as I said, it's only a guide really to what real transactions have given you. And the last couple of years, there's been a couple, I think, on contingent resources in heavy oil, which are, I think, in the sort of $4, $5, $6 a barrel range, which may be fair for contingent resources. But it's not an exact science. It's just what you get if you look at the trend and actually plotting those transactions.
Yeah, I understand that. I know that Jefferies did a report a couple of years ago which I think looks at or qualified the average sale value in the North Sea for the 2.5 years before, which I believe came out at $13.7 a barrel. And obviously the Trax valuation is, I think it's about $8.8 a barrel. It's just the disconnect with the share price again, and obviously some people's expectations would be that any industry deal would be done on a per barrel value, or that would be the output measure, whereas some people would see the share price arguably so depressed at the moment that you can't have any expectation, shareholders, of getting anywhere near those metrics. I mean, I would like to believe the former, of course, as opposed to the latter. So I'm really asking you just to reinforce that belief, if that's still so.
What I'll reinforce, Paul, is the strategy we have, which we believe will get us to a funded FDP and get us to a situation where we don't need your money, but if you'd like to buy a piece of Bentley, that's a different discussion. If you're looking for some sort of peg in the sand evaluation. But I think we're not driven by dollars a barrel. We're driven by getting this to the point where we know we can create value. I don't know what that's going to be. I wouldn't judge that, but certainly, from an industry perspective, if you're at a funded FDP stage, you have a very different conversation with somebody, as opposed to needing their money to get you there. It's always the challenge between asset and money. Who's right?
That's fine. Thank you.
I think at that stage, ladies and gentlemen, I think we've had a fairly long afternoon and a good exchange of views. We'll be around for a while to come. I hope you'll join us for a cup of coffee next door. And if any of you have further points you'd like to raise, we'll all be happy to listen and to try our best to answer. Thank you very much for attending. Thank you for your attention. And coffee is served.